All right. Today I want to talk about how to read structure, which is the most important thing within trading. I mean, besides, proper risk management and all that. So by doing that, I'm pretty much just going to give a walkthrough on how I personally trade. So first things first, you want to understand where the general direction of the chart is going. I'm going to walk through how I executed today, actually. So if we just let's just start off on the daily. If we start off on a daily and we're looking back and we have a bullish bias, if we're within here at this fair value gap and we push in, respect it, respect consequent encroachment, the halfway point with the wicks, always remember the wicks tell the story. Then we know that it wants to go higher. So, it pushes higher. It's kind of choppy, but pushing higher. And how I've been reading it today was, hold on, let's do this on ES. Actually, no, we could stay on this chart. Pretty much we had a couple candlesticks of consolidation. I go into the 4 hour, I see that we're bullish. I want to see a retracement into here, sweep out these lows. Now, we only got one sweep of that low. The day was kind of chopped because FOMC. The day was just very, very lame. It's just very, just consolidating. But I had these highs marked. Now, I'm going to explain why I had these highs marked, knowing instead of I wanted to see at least one of these highs one of these lows get swept, and I knew these highs were gonna get taken. And I'll show you. I'll show you. I even called it. All right, here we are in TJR's Discord with the mentorship. I'm feeling like we're gonna hit all-time highs again, depending on news though. But I knew we were gonna hit all-time highs because these were unprotected, which means that this high never swept out this high. And we are right here generating this liquidity, right? And what I mean by that is that these start becoming trend lines. Obviously, these start becoming trend lines for retail traders. So they want to see shorts. Now, that's exactly who we hunt is retail traders, right? So there's low resistance liquidity here. There's plenty of buy side liquidity, including these two highs. As you could see, we take out sell side liquidity here. We take this out. And that was right before news. I actually took this trade here that took a while. I entered in off of an inversion right here, off of this inversion fair value gap right here. I took a short off of that close. First stop was above there. This was my final TP. Now it's bad risk to reward, but I actually took off because of how choppy the day was. I didn't like how it was just consolidating so much. After this high, I put my stop loss here and I made this my final TP. I took off all of my profits except one here. And then that worked out beautifully because FOMC hit. Boom. We could also talk about how to predict where it's practically going to go. Now, if our overall bias, I mean, this is common sense, but you have to think of it like this. If our overall bias is bullish, as you can see, right? We're bullish. We're leaving higher lows. I do eventually believe that these lows will get swept though, but if our overall bias is bullish, you want to see these slight retracements into these lows be an opportunity to get in and buy. Now, I short to them because I'm very precise. I know how to target out the liquidity, but I know that it's nobody wants to trade. Here's a tip. Always trade the extension, never trade the retracement because you know it's going to extend eventually. So you can't get caught trying to catch this and it already reverses on you. You want to follow this. You want to follow the extension. Always trade the extension. Don't get caught trying to get these retracements because you're money hungry. Me, I trade some of the retracements because I know where the liquidity is. It's very, very good because I've gotten better at targeting out where's the draw. Before this was going to leave, I knew it was going to at least take down one of these lows, and it did. And then it blew through these, played within this inversion as well. The inversion I marked and this fair value gap and left as FOMC. Additionally, let's just tape read this here. Now, there's a whole bunch of chopping, but if we really look at it, we have just sell side and buy side getting taken when we're consolidating over and over. Now that these highs are gone, I'm going to remove that. And now that all of this buy side, now I'm going to mark it out. Where do I think the market's going to go? Now that all of this buy side liquidity has been already taken, yeah, we can mess around, generate. We're probably going to consolidate for a little bit. And why I believe that is because when we consolidate, we want to sweep out the generated highs because now we pretty much took out all of the liquidity the market had since we are at all-time highs. Nobody likes trading after all-time highs get hit because there's nothing to the left of us. There's no more buy side. So it has to generate some buy side liquidity. So this is what it would probably look at. Sweep up, and then we could find a move down. You can't take shorts. You can't take longs when BSL get hit because it's just too risky. You don't know. You have nothing to target. So I would like to see these low resistance liquidity areas get taken here and retrace down to. But how I've been reading it, because now that the market's already here, let's say, for example, these past 2 days, you've been generating these highs. Why do I think these highs would have gotten taken and not this high? Because this high, if you're just watching, this high doesn't need to get taken. This is an all-time high when you're over here. This is the all-time high. It's not necessary for this high to get taken because there's not that much residing liquidity above these highs. It's above these highs where they're generating liquidity. And as you could see, they sweep them out. Go down to a lower time frame. They sweep them out after accumulating all of this liquidity and then dip. And what time is that? 9 a.m. So I couldn't catch this move, so I pretty much waited for the next. And so what it do? It just, this was all news. Took out these forms of sell side. Generating low resistance. This is what changed my strategy right here. Targeting highs that haven't been taken out yet. See, if you're targeting a singular high, this is a protected high. This swept out all of that, and it's not necessary for this to come back up to it. This has more liquidity over here than over here. It's not necessary to come up here because there's not multiple highs next to it. Like right here, all of these highs. Let me see if I can find the tool I'm looking for. All of this is unswept generating. And what makes it even higher confluence is this is how I would read it, is that there's a fair value gap, a bearish fair value gap. So it's going to sweep out a form of buy side liquidity right here. It swept out the form of that, and then it tapped into the inefficiency. Then you could automatically start targeting lows and just target the next form of sell side. And I'll show you how to get down to it because nobody wants to enter in on a 15-minute. I mean, on a 1 hour. So it's too early. We already get a huge dip down by, oh, well, we already kind of ran through by 9:30. But I actually took a setup here, an inversion setup, because we had two south side liquidity sweeps. And obviously there was one more draw to get hit, which was this one, this internal low. But I took a setup here, and I'll show you how I took it. Even though this setup was perfectly fine, I don't trade till market opens. Okay, so we had one sell side sweep and very little of a displacement for such a higher time frame sweep, right? Those were hourly 4-hour candles. And then you have a singular fair value gap that was inversed, and this is a textbook setup. You target from targeting this buy side liquidity down here, because that's what this becomes, is this buy side liquidity sweep right here into sell side liquidity sweep into buy side liquidity. So you could target off of this close. I put my stop over here, and then you could target other highs. 1, 2, 3. And the reason I would say these is because, like I said earlier, these are unprotected. I'll show you a protected high. Actually, I already kind of did. For example, this, I already showed you a protected high. It would be something like this. This all-time high here was protected. You want to target low resistance. You want to target low resistance when you're reading. This is a protected high. There's nothing next to it. It's just one singular high that swept out everything. You wouldn't like targeting those. I mean, in the long run, they did get hit, but because it became low resistance, I accidentally swiped off my chart. But in the long run, you could target it because it did become low resistance. Because this high and then this high here, they looked very good next to each other. This looked like something retail traders would see as support. So they were like, okay, these are protected. This is a safe zone. But for us, this is a target. This is target zone right here for us. Just like this is target zone, because that looks like a safe zone for them. And it dips. Then you have a 4-hour. And you never want to play in such high time frames when you're day trading. You just can't. So what I would have done here, when you come into this indeficiency, you have all of these sweeps came rebalance inside. I would have looked for the first inversion. And so clearly this is the cleanest inversion you could possibly get. Closes under, you just short it. You could short it down. The reason I like the inversion setup so much is because you get such a good fill. For example, this internal liquidity sweep, get the inversion here, and then you could target some buy side. And this is on a 5-minute. You could target some buy side, and it goes. It will always work, it seems like, if you have a good enough sweep. Now, the only setups I don't take is when there's equal lows. I don't like that because I've noticed on my part that they really occasionally they come back for it, and I don't like taking that risk of getting stopped out. Let me just fix this. You have to look at these very specific lows in order to target them. Like today, that was a clear target because we have some, for example, these are relatively equal. This is what I wanted to target. And that's what I targeted. That's what ended up actually getting hit. Then you could actually look for a setup on the opposing side. You got the liquidity sweep. You have the fair value gap inversed. It even gives you a tap back in, so you could really enter in down here. And then if you want to trade news, I mean, the sky was the limit for that. But I've learned additionally that if you're trading news, like if you just want to say risk it, whatever, for like a low percentage trade, this whole thing runs perfectly well. It actually is the prerequisite of what the news is if you know where the news is. This is how I know where the news is going to go. That's why I said all-time highs are getting tapped, because I saw this low resistance liquidity in the morning. So normally, let's say before news it spiked up and swept out this. Then we can you make the I make the conclusion that okay, maybe it's gonna go for sell side now. But first it swept out sell side at 140, and then news is gonna target the buy side. Has nothing to do with news and how buyers and sellers react to it. Has everything to do with reading the structure of the market. That's it. That's how I know where the news is gonna go 99% of the time. Sometimes I just read the structure of the market wrong. And if you read it wrong on news, you're screwed. So that's why it's not safe. But that's how we read structure. If you have any questions, leave it in the comments below. Thanks for watching.